It's been a week of unprecedented volatility across the political and financial sectors since Britain's Brexit vote to leave the EU. Businesses and financial institutions based in the UK now face a period of uncertainty. How damaging might Brexit be, or will it actually be a benefit to business in the city? Joining me to discuss what's next is private equity investor and former advisor to Boris Johnson, Edmund Truell, and the FT's business editor, Sarah Gordon. Welcome. Eddie, sterling down, banks announcing plans to possibly relocate quite imminently staff from London to elsewhere, shares in companies with big exposure to Europe getting hammered. I mean, it's not got off to a great start, the sort of whole period of leaving the EU. Is this the shape of things to come?
Markets were clearly surprised. I think many of us were surprised by the leave vote. What we've actually seen is that markets have stabilised very rapidly. FTSE's pretty much back to where it was last week. Why? Because those companies that are trading outside of the EU have been seen to be benefiting from this. Clearly, those that are selling large quantities into the EU, again, have a prolonged period of uncertainty.
But what do you think people in the city now really fear as being what could come from this? Or do people even think there's talk of that we might be able to do a deal which, broadly speaking, is sort of all right?
I think there's a lot of excitement around, in my community at least. People are thinking, well, actually, at last we're free from all those immense tangle of regulations and directives that stultified our ability to do business.
And there won't be any regulation coming from Whitehall. Is that the sort of...
Yes, Minister. I wouldn't trust that one. Of course, Britain has got its own regulatory regime. It tends to gold plate and enhance any regulation that comes out from Brussels or elsewhere. And we're not going to dispense with all that regulation overnight. Of course not. But Britain actually had a very good history of regulation. The Bank of England, before it had its powers dismembered, was an excellent regulator. The Stock Exchange, the Takeover Code, the Blue Book, the Yellow Book, they were clear, they were simple, they were principles-based. It was great regulation.
Right. Sarah, would you share that sanguine view? Or?
Well, the question is what we get for what we give in the negotiations, isn't it? And this is still incredibly unclear. If the city is to retain all the current rights that it has to trade freely with the EU, there will be a price to be paid for that. And the question will be whether whoever is in power, who is negotiating our exit, how prepared they are to compromise, or indeed how much they feel they've got a popular mandate to compromise. The two big issues for the city, and not so much for the sector that you're in, but the two big issues for the big banks are passporting and free movement of labour. And we've had some comments that there may be an attempt to retain passporting. I think the EU will demand a price if we get any sort of passporting. And of course, there are lots of politicians in continental Europe, particularly the French and someone like Emmanuel Macron, who does not believe that we should be given any rights and sees indeed a competitive opportunity here.
Eddie, if passporting were removed, how big a blow would that be?
I think there's a myth that you have a passport. I'm just about to launch a private equity fund. I've found, in contrast to 15 years ago, every single European country I have to go and get registered. Every single country. I was chairman of a bank a couple of years ago, and we had to again get authorised and regulated by BaFin in Germany and so on. It is not a passport in the sort of accepted sense of the word. My second point is that all banks have a lead regulator, the Bank of England, the Fed, whomever. And then other central banks, banking authorities, allow that bank to trade in their countries under the responsibility of the lead regulator. That's a very well-established system. It doesn't matter whether you're in the EU, whether you're in the US or whatever. That's the way it works. That system is unlikely to change, in my opinion, because it's about banking stability first and foremost. Secondly, free movement of labour is irrelevant for a bank.
Well, that's not what the banks tell me.
They're politicised in the sense they've got lots of customers. But for the actual staff of the bank, if you were to introduce a points-based system, for example, they'd be able to recruit anybody they wanted. Indeed, they'd be able to find it much easier to recruit an American or an Australian or a South African than they do today.
Well, it all depends what kind of regime is brought in after negotiations actually kick off. One of the really interesting things is not just what you do if you're a bank, a US investment bank, for example, whose European headquarters are here partly because of access to the EU. But for example, Deutsche Bank is not in the city because of passporting. It's in the city because it sees London as giving it access to global finance outside the EU. It's in fact, London is its base for trade outside the EU. And the really interesting question is what happens to that. I mean, we may lose some operations. I mean, the likelihood of us maintaining the ability to clear euro trades in London after we leave the EU, I think, is minimal. That means a certain segment of particularly investment banks' operations will have to move elsewhere, but a lot of activities will still continue.
And some people say that the euro may be lost, or that particular business in Europe, but London could pick up the renminbi business and this sort of whole reorientation. Do you buy that, Sarah?
Well,
I mean, there's a sort of politically, I think there's a lot of will behind that, but do you think that's plausible?
It was a very big plank of the economic argument of the Leave campaign that a lot of UK business was far keener to do business with the rest of the world, with faster growing areas of the world such as Asia, the Americas, than it was with Europe, which is stagnating and low growth. And certainly that now seems to have been backed up by the Prime Minister, who at a meeting this morning with his business advisory group said we must not be fixated on the EU, we must reach out to countries outside the EU. And in fact, he's going to set up high-level trade delegations with business people and politicians to China, to India, to the US, to the leading Commonwealth countries to try and push that agenda.
Sarah Gordon, Eddie Truell, thank you both very much.